Hey, good morning, guys. We had a major technical glitch in the technical hitch in the giddy up. So, good morning. Glad to see you here. Time now is very late, 10:17 my time, 12:17 Eastern, and it's the 26th day of December 2015. All right. How's everybody today? Merry Christmas. Did you have a Merry Christmas? Hello, Tim. Some of you other guys give me a sound check. Let me know you can hear me. Good. Okay. Very good. Hey, Ron. Hey, Richard. Okay, guys. All right. Let's hope everybody had a Merry Christmas. See some people who are partners, and it's okay that you're here. This is designed primarily for people who haven't become partners yet. So if you're a partner, I don't know that you're going to learn anything in particular new. What you should do if you are a partner is you have access to unlimited private mentoring. As much as you need, as often as you need, all you have to do is just request it. And that's when we can get down into specifics with you about various indicators or trade setups and whatever issues that you're dealing with, because all traders are always dealing with all kinds of issues. So I'm going to talk broadly today to those here who are dealing with a broad set of issues. And so if you're here on the day after Christmas, then something in the email that I sent resonated with you. You have spent time. I had an email last night from a gentleman who said, I have spent $200,000 trying to become consistently profitable, as you put it, and I've had no success. How many people here can identify with that? Does that ring a little bell? Sound is a little soft. I'm not sure what you mean by soft. The gain's kicked up pretty high on the mic, so much so that it starts to echo back. Is that better? Yeah, but doesn't it sound a little bit tinny, a little bit like it's got an echo in it? No? Okay. All right. Sounds a little weird back in my headset, but that's okay. As long as you can hear it good, that's what matters. Okay, so I want to hear from you guys what your issues are. Okay, so the first answer I have is I've had some success here, but inconsistent results is my problem. And then I have another answer. My problem is confidence. Okay. Got out of mutual funds at 18,000 late July. Haven't made a trade yet. Okay. Taking wrong setups, lack of patience. learning. I've been out sick for 2 years and trying to get back into the swing of things. Okay, I hope you're feeling better soon. Trading most days, but misread the market and stall taking a stop out. Okay. I don't get out of a losing trade. This is someone else. I don't get out of a losing trade. I just keep hanging on. My entries need more refinement. Okay. Overcoming fear of trades. Overcoming fear of trades don't work, for example. Okay. Get chopped up on sideways trading range days. Okay. All right. A lot of common themes there. Number one is properly being able to identify what the chart's telling you. The market is always building legs in one direction or another, and even when it's not building legs in any particular direction, that's what we call a transition. It's simply moving from a bullish to a bearish bias. Now, give me an idea what kind of time frames you guys are trading in. I'm going to grab a cup of coffee, guys, and I want you to type in some more stuff for me. Type in the time frames that you're using. Type in the types of setups that you're using. And let's see what we can work on. And I'll be right back in just a second. Okay, I'm back. Uncomfortable silence. Yeah, that's an old webinar trick designed to make those who stick around think deeper and write stuff, and those who aren't so interested go away. No, I'm just kidding. It just took me a long time to get all the way down to the coffee and all the way back. So, I'm going to read through some of these answers that you were kind enough to share. And let's see. Yep, see, there's one that's gone. Okay. I only lost one. That's huge. Yeah. Okay, let me scoot back up just a little bit. Okay, chopped up siding. I think that might be where we chopped off sideways trading. Open till 2 hours. Steve, help me understand. Maybe I might have missed part of your question, but the part I got here was open till 2 hours. So if you can maybe just type in again. Oh, I do not have time to be a day trader. Well, if you want to become a day trader, then that is a problem. That is a serious issue. I mean, there are opportunities at night, and there are opportunities off the London Open. If you want to get into quote-unquote swing trading, I mean, that's possible with our methodology. It's possible with our indicators because markets are fractal in nature. If I take this chart here, well, you can see it's a 10-tick chart. But if I change it to an hourly chart, or if I change it to a daily chart or a weekly chart, and I remove the label and I remove the times at the bottom, it's impossible to tell the difference, what chart that is. I'll find a chart that doesn't have any writing on it, and I'll show you what I mean. If I hide this, and I hide this, then you can't tell the difference. They look identical. This chart looks identical to a weekly chart, and a daily chart, and an hourly chart, and a weekly chart. So if that's what you mean by you don't have time to be a day trader, then you can use larger time frames to set yourself up for, you know, longer term swing trades. The concept of a swing trade is that you'll go off to work, and at lunch you'll check in on your market and you'll be up $600, and then on your way home from work you'll be at a traffic light, you'll check your position, and you're down $300, and so then you race home, and by the time you get home you're down $600, and you get yourself out of the position, and man, you're a little bit ticked off with yourself, and angrily you go to bed, only to wake up and find the same position $1,200 higher at the opening bell. And then you really start to get upset. So swing trading, although our indicators and methodology will adapt to the concept of swing trading very nicely, you have to be able to adjust. It takes a whole different skill set emotionally and psychologically to take advantage of those bigger swings, because of the fact that you'll go from being up many hundreds of dollars to being flat, to possibly being negative, to being positive again, to being negative, and then determining ultimately where you're going to take your profit and get off the pain train. So if that's what you want to do, that's something we can certainly teach you how to do. Looking at numerous time frames, 1, 3, 5, 10, 30, 60. Okay, so that's from when the question I asked, What time frames are you using? Okay. Any of those time frames that you mentioned are perfectly fine. One thing you have to understand is that there is no magical time frame. Sometimes people tout that one time frame is magic over another, and it can make trading as simple as falling out of bed by using this time frame. There just isn't any truth to that. Sadly, if there were, I'd be all over it. Okay, so Michael, I'll show you, Michael B. That was swing trade. You were interested in swing trading, so we will here in this little short time period we have together. I'll show you some examples of swing trades and exactly how they work and what they look like, using our indicators and using our methodology. Steve, scalps and day trades, 1 to 2 hours or a bit more, depending upon market momentum. Okay, let me back up to your last question and see if the two tie together. No, your last question had to do with holding on to a losing trade. It is what you say, Steve. It's such an amazing human ability that we have. A losing trade, oh goodness, we'll hang on to that sucker for 2 days, hoping, expecting, praying it's going to come back to break even to prove us right. Because if it doesn't, then that means we were wrong, and we don't like to be wrong. And losing, there's the 3 fears of losing. I'll talk about that in just a second. And most of us fall under one of those 3. Now, on the other hand, while we'll hold on to a losing trade forever, a profitable trade, we can scarcely hold on to that thing for 2 or 3 ticks. It goes a little bit in our favor, and man, we just want to grab it, because this way we can tell ourselves we're a trader. We had some green on the board, and then we go off to our day job or the rest of our life, whatever that is, and we can feel good about ourselves. But the whole business of being a successful trader is not about feelings. It's not about emotions. In fact, until we learn to remove our feelings and our emotions from our trading, success will elude us. We have to become somewhat robotic. We have to be like the guy who sits down at the assembly line every morning and grinds out the widgets. Every widget is identical. It's the same. There's nothing special. His boss never comes by and says, "You're the best widget maker on this assembly line," because they're all the same. They're all the same. And so that's really, as a successful trader, you will have a specific trade setup, and some of them will be profitable as you execute them. Some will be unprofitable. That's what you learn to accept. That's where the emotions go bye-bye. Okay? The best trader on his best day, on average, will be profitable 7 out of 10 trades. That also means that he'll be unprofitable 3 out of 10 trades. So the part about being profitable 7 out of 10 trades, we can accept that. That's pretty exciting stuff. But remember, in order to get to the 7, he had to go through the 3 unprofitable trades, which means he had to let them go. When they hit the point where it proved he was no longer successful, he was willing to hit the exit button. We have to learn to be able to do that. We have to draw a line in the sand. Now, here's what I do. When I put on a trade, I establish in my mind, well, not just in my mind, but on my chart, a hard stop, which if I'm trading in the live trading room, that's going to be an 8-tick hard stop. It's going to be a bracket order. So it's not anything I'm ever going to wrestle over or try to make a decision about. You don't want to ever put yourself in that position of having to have a mental debate or a mental conversation with those voices in your head. Well, do I put it here? Do I not put it here? Or maybe if I actually put the stop there, then they, whoever they are, will know where it is, and they'll come racing, hundreds of points across the page to take out my one contract order. And the truth is, they won't do that. It doesn't make financial sense for them to do that, and so they won't. But it sure seems like they do, doesn't it? So you have to use a hard stop, and you have to honor your hard stop. Okay. The DOMs, when I first started, didn't offer one-click bracket orders, where you click once and you get your entry, your stop, and your target. When I started in 2005 with Townsend Analytics, and they were pretty cutting edge at the time, you had to place an order to get in, then you had to come back and place another order for your stop loss, and then you had to go back and place yet a third order for your target. Well, once you were in the market and the ball was bouncing, and you're trying to follow the bouncing ball, it was very easy to make excuses why you don't want to take your eye off the screen long enough, to grab your mouse and look at your DOM and put in your hard stop. Today we don't have that excuse because it's all automated if we allow it to be. Now, some people go, well, I don't want a hard target. I want to trail my stop. Okay, you can leave the target open and still put in a hard stop, and it's all part of a one-click process. 7:30 to 9:30 Mountain Standard Time. Okay, so those are the hours that you have to work, I'm assuming. So that gives you 8:30, no, that gives you, Mountain Standard is 2 hours, so you have 9:30 to 11:30 Eastern to do your trading. Well, those are the best 2 hours of the day, so you're good to go there. The London Open is really good because there is participation, there's movement, there's volume, and the London Open is not quite as chaotic as the New York Street Open. It also requires that you get up at 3 o'clock in the morning and be wide awake at that time to trade it. So we talk about that a lot in the live trading room and on the radio show. For those living on the West Coast, it's not such a bad deal. It's a matter of staying up till midnight, getting your points, and then going to bed. Now, some days you get your points in one trade, one shot, one kill, one and done. Other days, it takes more than one trade, okay? So, but in 2 hours, no matter what kind of day it is, you should be able to get your points in a couple hours. I am looking to trade moves between support and resistance levels, keeping the trend or lack of trend in mind. I do this well, but still have poor results some weeks. Do you understand why you have poor results some weeks? Hi, was 21 minutes late because I was told I need a password by the system. Could you please give a quick location? Thanks. Richard, there was a hitch in the software, so all I've done is ask people to type in some of the issues they have with trading, and I've been reading what people have written. And so anything that you missed at the beginning, you'll be able to go back and listen to the audio recording later. Okay. Um, okay, there's another one. It's gone. Hey, Dwayne, I'm not quite sure what you were asking. I just got access to the seminar as you were leaving on this break. Oh, Joel, what I had asked is I had asked people to tell me what sort of problems they were having with their trading. What was preventing them from having consistent profitability in their trading? And I think the final question I asked was someone had brought up time frames, and so I asked, what time frames are you trading in? And then I think I might have thrown in what method, form, or style of trading are you using? There's all different methods and styles. There's some of the more generic type ones like Fibonacci and the Elliott wave and market profile. And then there's some more specific ones. And you don't, I'm not asking you to call anyone or anything by name because we don't ever allow ourselves to get into that type of, in our mentoring process, we don't ever put anybody else down. A good tree will bear good fruit, and so the fact that you've stood under that tree, and now you're asking me, you know. So again, we don't get into bashing each other, but feel free to type it in. I just won't read it out loud. And another thing, guys, whatever you type in the chat box, it's between you and I. In other words, no one else sees your question, so don't hesitate to type in a question. Let's see. So, Joel, thank you for asking that question. So now everybody's heard it again. The kind of feedback I wanted to get from you guys, because I'm going to take you on just little short mini journey through who we are and what we do. And training's not rocket science. It's also not easy. Now, in fact, our logo, trading's not easy, but it can be simple. That's what we've tried to do, is to reduce it to the lowest, slowest common denominator. Okay? We don't. Now, Michael and I have been trading together since 2006, and we've built and coded so many different things, and we used to have so much stuff on our charts you could barely see price, and we realized that was not the answer, and so we began to strip things away, and ultimately we were left with a couple of the things that we had used over the years that actually did benefit us in our trading, and we hung on to those, and that's what we've been teaching now for years, quite a few years, in the live trading room. So we'll get to that in a minute. Okay, Ron says, I'm looking to take at least 5 to 10 points on moves 1 to 2 or 3 times a day. That is my goal. I do okay, and I'm improving. I'm thinking of working with your method to get more consistent at profiting most trades. Now, Ron, when you say you're looking to take 5 to 10 points on moves 1 to 2, 3 times a day, what market are you referring to? Are you talking about the S&P? Oh, okay, see, there's a problem there. You're looking to take at least 5 to 10 points on moves 1 to 2, 3 times a day. Now, there is, and I'll just show it, I'll show it to you real quick. If you go to Google, and you type in tips for Emini traders, try to give you the link. Well, that's the one on Fibonacci. I was looking for, maybe it's goals. Maybe it's goals for E-mini traders. That's what it is. Goals. Ah, there we go, right at the top. Right where it should be. 4 critical goal setting tips for E-mini traders. Okay. Number 1, goals must be clearly defined, and maybe we'll go into this just a little bit. Goals must be realistic. Goals must be attainable. And then last but not least, goals must be measurable. And maybe we'll dive into that just a little bit. But the fact that you're trying to take a 5 to 10 point move out of the S&P presents a problem when the average swing in the S&P is only 3 to 5 points. So you said that your results are not consistent. I would say that when the S&P actually makes a 5-point swing, that might be when you're actually profitable on those trades, and on the times that it doesn't go at least 5 points would be the times that perhaps you're unprofitable, because you can go back to the inception of the S&P 500 and you can just, I mean, yes, there are 10-point swings and yes, there are 2-point swings, but the average swing in the S&P, and that's a giveaway, anybody, I'll just give you that today. It took a lot of time and a lot of knowledge and a lot of chart mapping to define that, but you can define that with any market that you trade. And that's a powerful bit of knowledge to have if you're a crude trader or a gold trader, if you know what the average swing in that market is. Now you're working inside of a framework where what you want to do is not only realistic, but it's also attainable. Okay? All right, let's see what else we got in here. Oh, thank you for your kind words, Ron. Okay, Steve, when you say 5, 10, 30, I assume you're talking minutes, and that would be the time frames that you're working with. Okay. The 5-minute is a very common S&P 500 E-mini time frame. The issue with 5-minute candles, not that they're bad, but they're all different sizes. We use range charts, which sort of homogenizes the chart. It gives us a certain amount of symmetry. Now, our methodology can be used on a 5-minute chart. We just choose to use it on a range chart where every candle is the exact same height. So on a 5-minute candle, you know exactly when the next candle is going to open. With the only difference with the range chart is we know exactly where the next candle is going to open. So on a time-based chart, you know when. On a range chart, we know where. Okay. Let's see, what else did we get typed in? Some of what you were just talking about, not sticking to a hard stop. I'll say again now, guys, just to get it out of the way, the hard stop, you have to use a hard stop. And if you don't, you won't find consistent profitability, because we are in this business in trading E-mini futures. It's nothing but a business of probabilities. You have to learn to think in probabilities. You have to understand, as Mark Douglas wrote. He's a friend of mine who recently passed. I'm sure most of you who know who he is and have read some of his books. Hopefully you've read Trading in the Zone. That was his seminal work, and literally days before he passed, he completed his third book, which he assured me would be his finest book yet. So I'm anxious to see when his wife will release that third book. But you don't have to know what's going to happen next to be profitable in the market. All you need is a definable edge. Now, the first time I heard him say that, I was like, Mark, that doesn't even make sense. But he explained it. You don't have to know what's going to happen next to make money in the markets. You simply have to know what you're going to do next. And then, as long as you have a definable edge, and that's what we teach as a CFRN partner, we teach you a definable edge. We give you the tools to identify that definable edge. You then have to learn to think in probabilities and accept that there is a random distribution of wins and losses in the market. So let's just take a number out of the air and say 10. Let's say you have a trade setup that has a definable edge, and we're going to reach high here, because remember, the best trader on the planet on his best day is profitable 7 out of 10 times. So we'll use the best possible example, okay? Now, if you're going to be profitable 7 out of 10 times based on that number, that means 3 times you're not going to be profitable. Now, as Mark teaches, there is a random distribution of these profitable and non-profitable trades. Now, what that means is your first trade of the day could be a stop out. Your second trade of the day could be a stop out. Your third trade of the day could be a stop out. Now, of course, you think, well, then the next trade, the next 7 trades have to be profitable trades. Oh, if it were only that easy, right? But it isn't. The world's a much bigger place than that. So even if you have a definable edge in which you are quote-unquote profitable 70% of the time, the world is not sectioned off in 10 trade increments. In other words, you could have 1, 2, 3 stop outs, 4 stop outs, and then hit a profitable trade. And then hit a profitable trade, and then hit another stop out. Has that skewed, has that in any way messed up or destroyed the fact that you have something that has a definable edge, which says, on average, you'll be profitable 7 out of 10 trades? Not at all. See, that's something Mark understood. That's something that professional traders understand. There is a random distribution of profitable and non-profitable trades, and you have to be A, capitalized well enough, and B, confident enough in the methodology that you've chosen to see it through until the numbers swing in your favor. Unfortunately, most people don't. Now, when I say most people, I'm always talking about myself. In the beginning, when I first moved out of the world of equities, trading based on fundamentals and whispers and all that noise, and moved into a purely electronic market where there was no manipulation, no middleman, no monkey business, and I began to learn the business of technical analysis. It was a very, very eye-opening experience for me. But I did every single possible thing, everything you'll hear me speak against, I did. I traded without a stop. Was I told to use a stop? Sure. But I was a successful businessman. I had made a lot of money for someone of my age. And so, that's kind of like, yeah, some kids need training wheels, but, just give me the bicycle. Better yet, give me the motorcycle. And no thank you, I don't need a helmet, right? Well, by the time I was done, I needed a helmet. I also had a lot of other issues that most traders face when they begin trading. I would have it clearly worked out in my head from a night of late night Googling and historical chart reading. I would know exactly what I was going to do the next day. It all made perfect sense. I had it mapped out. I had tested it on chart after chart after chart, static after the fact charts. I would go in the next morning, I would sit down, and as the markets began to unfold and unroll and start moving, back then Globex was barely tradable. Today it's extremely tradable, but that's another issue. But all the things I taught myself the night before, after being stopped out 2 trades in a row, I immediately forgot the value of all that. And here I am in the middle of the game, the middle of the trading day, changing my swing, changing my ideas, you don't do that when you're trading real money. Oh, and here's another famous one. When you have difficulty becoming profitable in sim, going live won't fix the contract. Going live won't fix the problem. And when going live with one contract doesn't fix the problem, increasing the number of contracts won't fix the problem. And you might get up to as high as 20 contracts, and yet there's just one more thing you've got to do, and then you'll be consistently profitable. Oh, I know. I'll trade other people's money. That'll make me sit up, pay attention, buckle down, and then I'll get it right. What it'll do is it'll end up making you feel pretty embarrassed in front of friends, family, your pastor, whoever you're made the mistake of taking their money because you weren't ready. And not only weren't you ready, but it added so much additional pressure, there's no way you could figure out this business. Now, the people who succeed in this business are A, some of the brightest and best on Wall Street, keeping in mind that 90% of the people on Wall Street, if you sat them down in front of a computer platform, would not even know how to put on and take off a trade. That's a fact. The bulk of successful traders are people you've never heard of. Their name will never be written in any book. They're just ordinary people who learned some fundamental things about trading and they go about their life, and they make a very nice income. If you turn on CNBC in the mornings, you see all these guys, and they're pontificating about the this and the that and the how-to and the what for and allocating and blah blah. Put them in front of a platform. Ask them to make a trade. I'm not talking about a TD Ameritrade platform. A 6-year-old can execute a trade on that. I'm talking about a direct access platform where you actually have to know what you're doing in order to trade. So let me go back and see what other comments we had to work with. Hello, Naresh. You typed my name, and now, okay, here we go. My frustration is following it seems like it is impossible to get into the trade. Does it seem like by the time Michael exits, I enter? Does your system show one how to learn that? Yes. One of the most deadly things you can do is try to follow Michael click for click. What you should do, and this is part of the training program, is that you come into the live trading room for 2 hours a day. You watch us trade real money in real time in front of real people, and you ask questions and you take notes. When the trading room closes, you then go and try to duplicate what you just saw. Immediately, you'll start to figure out what you don't know. See, as long as his voice is in your head telling you, okay, we got to pull back on the Russell, we need an up close, okay, we're long at 1134. See, by the time he says we're long at 1134, this is all a very fluid movement. When you're trading futures, it's not like equities where you stock the trade for a couple days and then you're going to enter on some candlestick signal if you get a close above the T line or any of that kind of stuff. Futures trading, when you're trading for a daily goal, it is a very fast-paced and busy business. So you'll always be a click behind. What we want you to do, I mean, you can go find 1,000,001 call trading rooms, okay? I wouldn't waste my money, but they're out there. You can certainly find them. What we want to do is we want to teach you to see the trade setup. In other words, when Michael is calling out a trade, you should have already seen that with your own eyes. You should already be moving your mouse to take action on that trade based upon the fact that you have learned the trade setup. Well, how did I learn the trade setup? You learn the trade setup by watching and asking questions and then practicing away from the sound of his voice. Because when you practice away from the sound of his voice, you'll quickly realize what it is you've not yet learned. Okay, all right, I just got a bullish cross. Now what do I do? I think I'm supposed to pull back, and then is it one tick, or you see what I'm saying? You write this down, and then you come back the next morning, and you go, hey, I was trying to trade on my own yesterday afternoon, and when this happened, I didn't know what to do, and when this happened, I didn't know what to do, and when this happened, and so we explain that to you. We show you on the screen. We can even scroll back to that exact same trade that you were referring to if you've kept good notes, if you've kept a good journal. And we'll show you on the chart where you had the problem yesterday, and then we'll move back forward to where we are this morning trading, and that same situation will repeat itself. Guaranteed over the course of the morning in one of the markets, it will repeat itself, and all you have to do is say, aha, because you'll see how that's handled, okay? The goal is to teach you how to trade. Not to convince you that Michael's a good trader. We already know that. We want you to learn how to trade. So you're given information 2 hours a day, 5 days a week. You have the weekly partnership meetings. You have unlimited access to one-on-one mentoring. Whatever you don't learn inside of those environments, ask in the live trading room and let it get pointed out for you. You'll always be one tick behind and frustrated if you want to match him tick for tick. Many of these trades, the time it takes for price to go from, well, let's see, what is this? This is a 10 tick range here. I'll put it on a 1 minute. Okay. And let me get rid of all the drawings. Okay. Now, on a chart like this, you always know where, or not where, but when the next candle is going to open. Once this candle starts to build, okay, exactly 1 minute after it starts, this candle is going to open. Now, the trade setup here, and we talked about this earlier, the trade setup here, after a bullish cross, price pulls away, price pulls back to physically touch the green line here, which is called the BBC. After that, once it physically touches, you need an up close, which is a green candle, and then you buy the open of the next candle. Okay? Now the next candle opens at 56 and a quarter. Okay? Now, from 56 and a quarter, you need to go all the way up to 58 and a quarter, which is way up here, 58 and a quarter. You see? Now, had you not entered on this trade, well, we'll go ahead and we'll go with this trade. Bullish cross, price pulls away, price pulls back. Now remember, this is a 1 minute chart. This isn't the chart that we use. Here's your first up close. That candle right there. The opening price, I'm sorry, it's 2056.75. So I'll write that down. 2056.75. 2056.75. Okay. So that's the entry. We always use an 8-tick hard stop. In the S&P, 8 ticks is 2 points. Now remember, we were entering on that candle right there. Now, where would our hard stop be? Our hard stop would be at 2054.75, which is right there. Can we get it red? Okay. So there's red. Okay. So we enter there. Our hard stop, 2056.75 was the entry. 2054.75 will be our hard stop, and 2058.75 will be our target. Now, This trade actually took quite a long time, from the entry at 1207 to 1228. That's a pretty long trade. Now, let's back up for a minute and let's go to the opening bell when we first start trading in the morning. Bearish cross, price pulls away, price pulls back to physically touch, down close, you sell the open of that candle right there. See, it's the same rules. The rules never change. Not for the S&P or the Dow or the Russell or gold or crude or soybeans. We trade every market exactly the same. So the open of this candle is 2054.75. The high of this candle is 2054.75. So you have no drawdown on that particular trade. 2054.75. And to get to our 2-point goal for the day, we need to get down to 2052.75, which would be exactly right there. Now, how long did that trade take? That trade took 1, 2, 3, 4, 5, 6 minutes. Okay. Now that's the S&P. The S&P tends to be pretty quiet, pretty stodgy. Okay. If we look at, let's say the Russell, which tends to be, or even crude oil, which tends to be a little more fast-paced. Those were trades where you actually would have had an opportunity if you were trying to follow him click for click. Okay, we'll find 930, 930. Okay, so we have a bearish cross, price pulls away, price pulls back to physically touch, down close, sell the open of that candle. Okay, open of that candle is 3804, and so from 3804 we need to get down to 3794, because that's 10 ticks. That gives us our daily goal. So from 3804 to 3794, we only get down to 3795. That's why we use aggressive risk management. Once we're looking for 10 ticks out of the trade. Now, in order for your order to be filled at a 10 tick hard target, price actually needs to trade through the 11th tick. Okay, so this trade lasted 1, 2, 3 minutes, at which point Michael would have been trailing his stop and would have gotten stopped out somewhere in this vicinity here, with probably anywhere from 5 to 8 ticks of the entire trade, which we're looking for 10 ticks on a crude trade. And so if he stopped out on this candle, for instance, that's a 2-minute trade. So that's where the difficulty comes in trying to find your mouse, find your entry, get into the trade, get filled, and by the time you get filled, you hear him saying, moving my stop to break even, locking in 1 tick, 2 ticks, 3 ticks. So you have to stop doing that. You have to stop taking responsibility for your own trades. Make sure you understand the setup. Bearish cross, price pulls away, price pulls back, down close, sell the open of the next candle. And so on this trade, because it was sitting at 9 ticks, I'm going to encourage you to be at least 7 ticks, because once it's moved 9 ticks, it's either going to go 2 more ticks in the same direction, or it's going to back up 2 ticks. And as we can see, it backed up a whole lot more than 2 ticks, right? So all of our work could have been for nothing if we haven't been aggressively moving our stop down. Since it chose to go the other direction, we get stopped out with 7 ticks. Oh, well, that's no good. I need 10 ticks to be done for the day. But 7 ticks is 70% of your daily production. Your entire daily goal, if you're trading crude, if that's the instrument you've chosen to trade, your entire daily goal is 10 ticks. That's $100 per contract per day. As you increase the size of your account balance, once you've added $2,000 to your account balance, that's when you'll add your second contract. You'll double your rate of pay. You'll go to a whopping $200 a day paycheck. We then go to a calendar-based method where you'll add a third, a fourth. It's designed at the end of a year to have you at 10 contracts, which means getting stopped out here would be worth $700. And so at that stage of the game, some people might be very content to just walk away from the platform on this day, content with $700. But if you're adamant, you're going to make your grand a day, then you'll take the next trade, knowing that based upon the random distribution of profitable and non-profitable trades, you could go from being up $700 on the day to being back to break even, or worse, because you might take a full 8-tick hard stop. So promise me that you'll do that. You'll start trading away from the live trading room. I want you to still be in the trading room, but I want you to come into the trading room with good questions. Questions that you could not overcome on your own. Now I'm showing you this on a 1-minute chart because everyone's familiar with 1-minute charts, and you see how these candles are all different sizes. Okay, you got some small candles, some big candles. When I change it to a range chart, that will change. We're going to make every candle the exact same height. Ta-da. Now, every candle on the chart is exactly 4 ticks tall. Not to be confused with a 4-tick chart, which is very, very fast, and no one is capable of trading that. But a range chart simply identifies where the next candle is going to open. You see, as price moves 4 ticks higher, on that 5th tick, a new candle opens. And on this candle, on the 5th tick, a new candle opens. And then it reverses and comes back. Now, once we get our reversal, and that's something you always have to ask yourself when you're trying to determine if a market is trending, because it will go leg, let me show you, it will go leg, retrace, leg, retrace, leg, retrace, leg, retrace, leg, retrace, leg, retrace. You got to start feeling the exhaustion here. And here's a good indication of that exhaustion, because we couldn't put in a higher high here. And we actually put in a lower low. See, the definition of a trend is higher highs and higher lows. Higher high, higher low. Higher high. See the problem there? And then there's that one last gasp, right? And then this happens. Now, this is where people will hold on to losing trades. Oh no, we're in a crazy uptrend, man. This is just a deeper retracement. No, I'm pretty convinced that we are actually at the beginning of a reversal. Okay? And so what does the market do? Starts to build legs to the downside. Leg, retrace, leg, deeper retracement. See, we got a deeper retracement, but we didn't get a bullish or bearish cross. Leg, retrace, leg, retrace, leg, retrace, leg, retrace. Where's my leg? I don't get a leg. Instead, I get a bullish cross. Okay. Now, in the grander scheme of things, this does look like just a deeper retracement. And let me show you. From here to there, that is an exact 50% retracement. And so this is where we want to make sure we have our hard stop in, because as long as you have a hard stop of 8 ticks, if you're trading off of the range chart, the worst that can happen to you on any given trade is that you get stopped out. And that's no big deal, because you have 10 trades a day to make your $100 per contract per day. If it takes you 10 trades every day to make the $100 per contract, seems like you'll never get anywhere. But if you're trading the S&P 500 or the Russell or the NASDAQ, commissions vary. With our broker, they're $580. If you trade metals and grains, energies, I think it's $680. But if you're trading the S&P, the Russell, the NASDAQ, and the Dow, it's $500 margin to put on the trade, but we never risk more than $100 of that 500 that we put up. If we're down 8 ticks, we take our stop, we move on to the next trade, knowing we still have 9 trades to make our $100 gross per day. Once you go live with one contract, if it takes you 10 trades every day, and it shouldn't, if it's taking you 10 trades every single day, we need to have personal mentoring sessions to help you figure out why it's taking 10 trades every day. But even if it does, in 47 trading days, you'll still increase your account balance by $2,000, which will prepare you to add your second contract. So this is more about building a business than it is about learning how to take the latest, hottest, clever indicator to come down the pike and learning some ancient secret and getting rich quick overnight. Some will say it's a slow boat to China. Well, bottom line is you'll at least get to China if that's where you want to go. And you're building your business on a solid foundation. Guy I talked to the other day. Of course, we always respect anonymity here, but he shared with me. He went through a training program with another firm. They did not teach him to start out in SIM, and once he had proven himself consistently profitable, to go live with one contract because he had the money. I'm assuming he had sold a business or cashed in some other investment vehicle. Because he had the money available, he went live with 15 contracts. Over the course of 2 days, he made $40,000. And on day 3, he lost it all. Can you imagine? That type of thing happens every single day in the markets, over and over and over again. So we are the antithesis of that, okay? We make you crawl along at a snail's pace. Now, we can't make you do anything. We can't come to your house and insist, put a gun to your head, blah, blah, blah. All we can do is tell you what we have found that worked for us. How did we find it? Because we made all of the mistakes. We did every possible thing wrong times two, because there was two of us, me and Michael. We did every possible wrong thing a person could do. And over the course of the years, we learned what was stupid and what made sense, what worked, what didn't work. And so that's what we built into our 90-day mentoring program. Yes, to a day trader, 24 months seems like an awfully long time, but in the grand scheme, it's not very long at all. And what you've done in that 2-year period of time, you've made some good money. You haven't gotten rich yet. Depends upon your definition of rich, I guess, because we have some partners who live in Africa, and so, rich is relative. But no matter where you are on the blue marble, at the end of 2 years, you have built a solid foundation underneath your trading business. More important, you have learned how to trade. Now, just because somebody hands you a set of indicators and tells you how to use them does not mean you've learned how to trade. Learning how to trade is a very specialized skill set. It can't be taught in 5 days. I don't care what the late night infomercial guy says. It just can't be taught in 5 days. That's why we have a 90-day mentoring program. After the 90 days, if you want to hang out with us, keep coming to the meetings, keep coming to the workshops, keep being a part of trading the weekly trading zones and hanging out in the trading room whenever you want, you can do that for a nominal monthly maintenance fee. But the important part is getting you through the 90-day mentoring program so that you actually learn how to trade. Because, I have so many guys come back to me after 3 months, 6 months, 9 months more, and they go, man, I went to this place and it sounded so good and they told me this and then that didn't work and then I went over here and, would you still teach me how to trade? Of course I'll still teach you how to trade. That's what we do. Yeah, but I'm broke now. Well, okay, that's another issue. We actually have some programs for that as well. So I don't want to see anybody ever go in debt trying to learn how to trade. That's just bad science. Also, I got to caution you. This seems to be the latest craze. We go through crazes in this business. For a while, it'll be indicators, and then it'll be oscillators, and then it'll be price action. Oh, the smart people just use price action. Only idiots use indicators. And then the phases keep cycling and cycling and cycling. And the current craze or phase right now seems to be risk 8 points to make 2. Well, on the days you're profitable, you feel pretty good about yourself. But what happens when you have a couple losing days in a row? How are you going to pull out of that hole knowing that you got to risk 8 points to make 2? That's bad science. See, anything that makes it seem easy is bad science, quite frankly. Our method doesn't make it easy, but it shows you that it can be simple. Now, our method can also be a little boring because we do the same thing over and over and over and over. Don't you guys ever do anything different? No. If you go look at our spreadsheet that's on the website, it shows 2 years of production in the live trading room. Every day, every trade taken, how many trades we took, all the information is there. And it's using the same indicators, same setup, same time frame, day after day after day. Okay, let me see what else is in the chat box here. Exactly, Nareesh. Oh, and you only set in one time? So you set in one time and you were trying to keep up with someone who's been trading since uh, he was 13 was when he placed his first trade. You see how difficult that is? So don't make it unnecessarily hard on yourself. You have to be willing to learn one day at a time. Um, uh, no, Steve, he said he was talking about 5 to 10 points. When you say average swing points, are you talking about ticks? No, I'm talking about points. Oh, Raphael, you came back. Um, when you say average swing points, are you talking about ticks? No, the average swing in the S&P is 3 to 5 points. You're welcome, Ron. Yes, you're correct. My friend Mark Douglas did pass away. Doji Queen. Okay. Do you recommend a daily loss limit to protect your account, or to take each and every setup for that day, regardless of the number of losses? That's a good question. Now, we allow 10 fresh trades every day. Before you can go live, you have to put together 10 consecutive days in the simulator back to back where you make $100 in 10 trades or less. It's impossible to get lucky 10 days in a row. Just can't happen. You cannot get lucky 10 days in a row. Okay? Once you pass that test, and that's a tough test, once you have actually been consistently profitable 10 days in a row, 10 trades or less, that's when you get to go live with one contract. Now, once you go live with one contract, that first day out of the gate, you've got 10 trades to make your $100. Hopefully, it's not going to take you 10. Hopefully, it's going to take you 3 or 4 or 5 or 6. If you're trading the S&P, we're only talking about 8 ticks. 8 ticks. Okay? You got 10 trades to make 8 ticks. If you're in crude or the Russell or gold, you've got 10 ticks. So you've got 10 trades to make 10 ticks. We're talking about grossing $100 here. So let's say on your first day out, it takes you 7. Okay? It takes you 7 of your 10 to make the $100. Well, those 3 unused trades, they roll forward to the next day. So when you come in on Tuesday, which is your second day of trading live, instead of having only 10 trades at your disposal, you have 13. Now let's say, for instance, Tuesday, you have a one and done day, because that happens. It's not uncommon at all. It's not going to happen every day. But let's just say you have a good Tuesday. One and done. Okay, so on the first day, it took you 7 trades, and so you had 3 rollover. So when you come in on Tuesday, you've got 13 trades to work with. But Tuesday's a great day. You put on your trade at the right time, and it ran to the target. Okay, so you have 9 leftover trades. So when you come in on Wednesday, you had 3 left over from Monday, 9 left over from Tuesday. That's 12, plus your 10 fresh trades from Wednesday. That's 22. You have 22 trades at your disposal to make your $100 per contract per day gross. Point being is if it takes you 10 trades every day to make the $100 per contract per day, if it takes 10 trades every day to get the job done, you'll still graduate in 24 months as a 20 contract trader. Now, once you go live, if you have to dip into your rollover trades, that's okay. If, however, you have 2 days back to back where it takes you more than 10 trades, doesn't matter if you have 70 rollover trades at your disposal. If you have 2 days in a row where it takes you more than 10 trades to reach your daily goal, we want to have a personal one-on-one mentoring session so we can kind of dig in there and figure out what the heck's going on. It could be you just hit a rough patch. Maybe there's some emotional problems going on in your life. Maybe someone's sick. Maybe there's, all kinds of things can go on in our life, and that can distract us from our trading. What we want to isolate in that personal mentoring session, if somehow you veered off the center line. Now, in the beginning, the first 2 things you're going to do is you're going to write your business plan and your trading plan. I know that sounds a lot like work, but if you want one of the highest paying jobs on the planet, you got to be willing to do a little work. And so you write your business plan, you write your trading plan. That alone should keep you in the center of the road. But if you need some personal mentoring, we're there for you. It's unlimited as long as you're an active partner. Michael and I, one of the 2 of us, will get on the phone with you, then we'll get into a go-to meeting, a private one, where not only can you see my charts, but I can see your charts, and you can show me, well, this is where I got into the trade, this is what happened, was there anything wrong? And I might point out to you that, well, in the slingshot, your divergence wasn't proper, or the market was not actually trending higher when you took a long trade. Could be any number of things, but we'll do our best to troubleshoot it and pinpoint it, and then you step right back out live where you left off. If you've worked your way up to 7 contracts, you don't have to go back and start over at 1 contract again. We just do a little pit stop, do some troubleshooting, back you go, right out into the race. How do you know it's a sell, Dwayne? When there is a bearish cross like this right here, price pulls away, price pulls back to physically touch, down close, sell the open of the next candle. The open of that candle is 37.81, and so we actually need to get down to, if the open is 37.81, we need to get down to 37.71 to hit our 10-tick goal. There's 37.71. We didn't get there. Okay, so what do we have here? The swing low was 37.72. We needed to get to 71. So we had 9 ticks in our trade. We were looking for 10. This is another situation where you would advance your stop loss to lock in 7 ticks. Once you've locked in 7 ticks, price is either going to go 2 more ticks and give you your goal for the day, or it's going to come back and stop you out with profit. And then, as it comes back and stops you out with profit, price pulls back to physically touch, down close, sell the open of the next candle. See how that recipe just never changes? So the open was 37.81 here, and the low was 37.74. So from 81 to 74, that's 7 ticks. So if you're trailing your stop on this one, maybe you only took out 5 ticks. And if you were trailing your stop on this one, maybe you only took out 7 ticks. Okay, that's an awesome day, because between the two trades, you got 12 ticks, which means you had 120% of your daily volume, and you have 8 trades to roll forward into tomorrow. So if tomorrow is your second day on the job trading live, you have 18 trades to work from, not just 10. So bearish cross, you're looking for long trades. Bullish, are you looking for short trades? Bullish cross, you're looking for long trades. Okay. Okay. I was disconnected earlier, so I'm not sure if you already answered my question regarding the concierge and the trade alert service. My recommendation, Raphael, is that you first learn how to trade. You can set them and forget them if you like. Unfortunately, that only gives you one shot at the trade. The trades, you hear me say this all the time in workshops, in the trading room, and especially on the radio show and during recap videos, is that important prices and important areas are almost always tested. And so it's almost comical sometimes when I'm going through the recap video that wherever the long alert was, price may run up 5 ticks. Maybe it's a market where you need 10 ticks. Then it'll come back and reset. It gets below the trigger line, takes off again, gives you 7 ticks. Well, it still hasn't hit the 10 tick goal, but it just gave you two trades worth 12 ticks. It'll come back to the trigger, off it goes again. This time it gives you 3, comes back, goes off again. This time it gives you 5. You follow what I'm saying? So to set it and forget it is to say that I'm hoping, I'm putting all my eggs in one basket, and that the first trade will trigger and run all the way to the target. I mean, if it's a 10 tick target, what if it runs 9 ticks? I mean, it could actually run 10 ticks. It could actually touch the 10 tick target, but unless it trades through it, you need one more tick for it to trade through. You would end up with a trade that did not turn out profitable for you, unless you've engaged the automated trading methodology, which is somewhat limited in DT Pro and a little more sophisticated in Ninja. I prefer the DT Pro platform. When it comes to the DOM's ability to trail a trade with a protective stop, Ninja is actually a little more advanced, and we have some videos in the members area of the website that teach you step by step how to set that up. So on a trade that goes up, 10 ticks, you can be assured that you'll lock in at least 8 and you'll have 80% of your daily goal. What I prefer is that someone be able to be in front of the platform when the trigger trades when the trade triggers so that they can manage the trade. Also, if you go back into Thanksgiving of last year, pre-Thanksgiving, I did probably a couple months of daily recap videos where I showed you how to use the trade alerts and the indicator set. And we would put a 50-yard line on the chart, a midpoint between the long alert and the short alert. Now, if we were above the midpoint, we only looked for long trades based upon the CFRN setup, and below the midpoint, we only looked for short trades based upon the CFRN setup. As a result, most days you would have your points for the day before you hit the alert, and then once you hit the alert, then you could very closely trail your stop, and that would be just an additional bonus on top of what you already have. And so that's true for both concierge trade alerts and the one trade a day. They work very well hand in hand. If you don't have the indicator set because you have not become a partner yet, I still encourage you to watch the trades as they trigger so that you're able to manage the risk. Can I trade options, day trade, or swing trade through CFRN indicators? We really don't get into options, Anjum. The only time that we do options is when price gets to our highest or our lowest weekly trading zone for the week by Tuesday morning. We have an options trade we put on for that. Otherwise, no. Can you explain the difference between the day trade room, concierge, trade a day, and partner service? Yes. As a partner, you have access to the live trading room. If you are a subscriber to the concierge trade alerts, then that's what you get. You get 8 trades every night, and they're emailed out during the Asian session, and once they're out, they are good all the way through the next release, which is typically 24 hours. The one trade a day alerts are issued at 11:30 a.m. just as the London markets are closing, because we have certain information we did not have the night before. We know what happened based on the London Open and any European news that might have come out. We know what happened on the Wall Street Open and also any economic reports that came out around Wall Street, whether it were the 8:30 a.m. alerts or the 10 a.m. alerts. So then at 11:30, when London closes, we usually see a surge of energy around 11:30 a.m. Eastern when London closes. And so that's what the one trade a day looks to capture, is that particular surge of energy. So that's the difference in the 3 things. If you become a partner, you have access not only to the live trading room, but the weekly trading zones. You have unlimited private mentoring during your 90 days and longer if you remain active. You have access to our video training library, which has well over 1,000 hours of live trading and live training. Okay. Hi, why do you start the room 9:30 Eastern Time? Because that's when the Wall Street market opens, 9:30 a.m. to 11:30 a.m. We take a 30-minute break, and then we come back and we do 2 hours of live radio. That's what we've done for years. Now, Frederick, based upon your name and the spelling, I'm going to assume you're somewhere outside of the U.S. But 9:30 a.m. Eastern, that's when Wall Street opens. No, Robert, that's $100 gross, not net. For a two or multi-lot trader, how have you found is the best way to trail after the initial target has been met? If the trader does not prefer all in and all out, well, you can trail behind the BBC. You can trail, depends upon how aggressively you want to be. See, if you were in this trade here and you were trailing behind the CFMA1, you would get taken out right here. If you were trailing behind the BBC, you would get taken out right here. If you want to choose to trail by some fixed number behind the market, let's say that once you reach your first target, you want to trail your second contract by 4 ticks or 6 ticks or 8 ticks. You can tell your DOM to do that. But if you're there to visually watch and see what's happening, it's obvious to see in this move that trailing behind the BBC would give you the better exit. Okay? Hope that helps. How do we learn to program the platform using CFRN indicators? Stephen, in the members area of the website on the first page, there is a video that teaches you how to set up a very simple methodology called the Francis. And what that does is at 4 ticks profit, it automatically brings your stop to break even. You have 0 risk on the trade. It will then track you for every tick that price moves higher. Your stop loss will move 1 tick higher. Price moves higher, your stop moves higher. Price moves higher, stop moves higher. At some point, depending upon how aggressive you want to be in the trade, you can let it trade up through. If you let it trade through your target, your 10 tick target, if you have a hard target, it will just take you out at the 10 tick target. If you don't have a hard target set, then once price actually has given you 10 ticks, you're going to want to take your mouse and you're going to want to grab the DOM and you're going to want to slide that stop loss up behind price. Okay? Now that video, there's a video and a PDF. It's both very detailed. The DOM in DT Pro, while again I prefer the DT Pro platform, it doesn't have as many bells and whistles in the DOM for trailing multiple things, but go in and take a look. In fact, when you open it up, go to this area right here. See where the little thumb is? Drop that down, go to configure, and then if you say, oh, here we go. If you say new, enter a name, call it the Steve. See, all that stuff goes away. And then you go through step by step as the video will walk you through, and you put in whatever parameters you want. Okay? Now, once you've programmed it, right, you've got to go in and you've got to actually select it. And then once you select it, you have to turn it on. See how it turned blue? Turn it off. Turn it on. Right? So, build the strategy, select the strategy, but then make sure when you open your DOM that it's blue and that you have the strategy turned on. That's real important. Okay. Okay. It gets lonely trading by yourself, so your room really helps, as boredom can lead to errors in attention deficit. People, Dwayne, as we live in a world that our attention span is less than 25 seconds. I agree. I agree, Naresh. Yeah. So being in the room is a good thing. Hearing other voices, being able to ask questions, being part of an interactive environment, that's very powerful, okay? But also, ultimately, trading is a lonely business where it's man and market, or woman and market. And so you have to learn to balance the two. You'll learn the most in the trading room. You'll discover the most when you're out there trading on your own in sim until you're ready to go live. But as you're out there on your own, man and market, trading in sim, you're in discovery mode. And you should be journaling, 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 journaling. In fact, you can download the app that's in the members area. The app is called Audacity. It's a free app. It's been around forever. It works wonderfully. You download that. You have it reside on your toolbar down at the bottom of the charts. And basically, your stream of consciousness, you commit it to tape. When you sit down and you start trading, you hit that record button, and as thoughts come to mind, you speak them out. Just as Michael talks his way through the whole 2 hours of trading, Russell, we've got a bullish cross, prices pulling away, prices pulling back. I recommend that you do that. And then at the end of the day, okay, after you've had some downtime, taken a walk, taken a shower, had some dinner, come back, sit down, put your headphones on. Listen to that little recording. It's a tiny MP3 file. And that's important because at some point you may want to email me those MP3 files for me to listen to. And so what you do is when you sit down to listen to them at night, your mind is not actively engaged in the business of trading. You are in a neutral or carefree state of mind. And so as you listen to your own voice and walk yourself through the charts, you'll be amazed how different the two seem. It's like, wait a minute, this is trick photography. That's not what I saw this morning, but yet it is. Now, you can do two things. You can use the replay factor that's built into DT Pro, and Ninja has it as well, I believe. Or you can simply move your chart to the hard right edge, and just using the arrow key, you can move forward one tick at a time as you're listening to yourself talk. Okay. Raphael, so with concierge, you need to be up pretty early, and the trade a day is more for East Coast time. No, not really, because they're both good for 24 hours, and important prices and important areas are almost always tested. So you'll see concierge trade alerts. Sometimes they'll trigger initially, shortly after they're released. Other times, almost always, you'll see a trigger around the London Open. But then they'll continue to trigger again and again and again and again throughout the trading day. Assuming you're a member of both, does one supersede the other? I don't think so. Well, actually, the concierge trade alerts, because you have 8 markets at your disposal for a lower price than what it would cost you to have 8 one-trade-a-day markets, then I suppose if you're basing it on a cost comparison, the concierge uh, gives the better value dollar-wise. Okay, Frederick, you are in a different time zone, so I'm not sure. You might need to get one of those world clocks, but we start at 9:30 a.m. because that's when Wall Street opens. Okay? Can you explain the trading zone a little more and how it is helpful? The trading zones are issued weekly, every Monday morning at 6:15 a.m. Eastern. Okay? The partners get an email every Monday morning, 6:15 a.m. Eastern. And price does this. It goes from zone to zone to zone. Back down to the zone. And when it's not moving from zone, this was a failed attempt to get back up to this zone, but you'll see this a lot. Consolidation. Price will go to a zone. These are hourly candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14. See how many hours consolidation we had there? And then zone to zone to zone to zone. Some of our partners simply trade the markets based on the zones. They simply trade zone to zone. This move here from 18 to 41, that would have been a 23 tick move, I guess. So, I mean, that's, if we're looking for 2 points a day as a daily goal on a 5-day week, that's 10 points. But this move here, okay. Now, with the trading zones, price will always do one of 3 things. It will when price reaches a zone, it will consolidate, it will be rejected, or last and least likely, it will slice through there like a hot knife through butter. And that's consolidation. And a hot knife through butter is just when price, yeah, that's kind of an example here, where it just slices through it as if it didn't even know it was there. But once it does that, it will then back up into the zone in most cases, do the consolidation, and then continue its journey. On the day of the Fed announcement, who remembers what day the Fed announcement was? Was this it? I think, no, don't think it was. It would have been straight up. It should be easy to spot. Maybe that one. Let's scroll down to the bottom. Does anybody remember the Fed day? Oh, Richard, thank you, the 16th. Okay, so let's go to the 16th, which is here. Okay, and so then we need to find the right set of zones for the 16th. Oh, which I think I think I have on another chart. Let me find it real quick. Yeah. Okay, so let's back up to the 16th. Okay, got a little cluttered here. You know, I can show you that a little better probably over here. On our Google Plus page, oh, by the way, we made it into the most recent version of Chicken Soup for the Soul. Read about Aggie's baby home. But what I want to show you is this chart without all the cluttered up writing on it. Uh-oh, where'd it go? Hey, that chart should have opened right up. Well, let me scroll down to the 16th, see what I can find. I want to show it to you uncluttered. 16th. There's the 18th, 17th. Goodness, there it was. Sorry for the delay. All right, and of course I don't have the zones on here. Okay, so the weekly trading zones for that week were 2016 was, I guess I don't have that sheet in here. Get a jumble of notes. All right, I guess we'll have to go back to the chart. Because the zone was at 2029.30 on that day. I'll just pull some of this stuff out of the way. So these are all individual trade instructions. So on the day of the Fed announcement, price initially spiked down when the 2 o'clock hour opened, came down and got within 4 ticks of the weekly zone and took off. So price is always attracted to the zones. It will always come back to them. Whenever price is at a zone, it will attempt to get to the higher zone. Now on this week, we had a zone that was way the heck up there. It was at 20.54, 55. It hit that one, and then the next one was all the way up at 81.82. Okay, those outlying zones don't always get touched, but when they do get touched and get touched on a Tuesday, that's when we do the options trade. So just remember this about the zones. Price, see now as we broke down through this area here on this particular week, we put in a leg and a retracement, a leg and a retracement. Stopped right at the zone. Leg and a retracement, stopped at the zone. Leg, retrace. Then this leg had a lot of momentum, so that's a perfect hot knife through butter. You got to be looking at it on the hourly chart to kind of get the idea, because if you drill down to a smaller time frame, what you'll see is you'll see the little battle that went on. Price pulled back into the zone for 1, 2, 3, 4, 5 hours. Then we get a leg and a retrace right back to the zone, and then leg, retrace, leg, and we're right back into the zone. To the zone. Okay. So let's go back to the other chart. All right, let's talk about, yes, Ninja does have market replay. Frederick.
what will happen, Frederick, is I'll send you an email with your confirmation. You'll have a user ID and a password. That lets you get into the members area of the website so that you can start between now and the open on Monday morning. You'll be able to start watching some of the videos that are available, and Michael will send you a list of a couple that you should probably watch first. Now, there's 236 workshop videos. Do you need to watch each one's at minimum of 2 hours? Do you need to watch all those videos to learn how to do the 2 simple trades that we do in the live trading room? The answer is no. But it's good information to have at your disposal when you have free time. You know, the more time you spend with them, the more familiar you'll get with the process of trading. I've always got to take you back to the place where our true goal is to teach you how to trade. Okay? It's not just to hand you a set of indicators and wish you the best of luck. Our goal is to teach you how to trade, how to use aggressive risk management. Unless you learn how to use aggressive risk management and be comfortable with it, then you won't be able to stay in the business long enough to learn the business of trading. Let this always be the carrot that hangs in front of you. Once you learn how to trade, no man can ever take that away from you. Knowledge is powerful. And knowledge isn't some ancient secret found in an urn in a cave somewhere. It isn't some latest breakthrough. The markets have been doing the same thing since they began, since their inception. They build legs in one direction, and then there's a period of transition, and then they start building legs in the other direction. And then there's a period of transition. Occasionally there'll be a V bottom or a V top, but it's pretty rare. Typically there'll be a transitionary period from short to long, long to short. Once you understand that, once you can see that, then it's all yours. Now, let me show you something here real quick. Let me finish, and of course I'll finish answering any questions that are in the chat box. Let's get rid of all this. I'll insert this. This is the primary indicator, the CF-CFRN. It has the CFMA1. It has the BBC, which is the bull-bear cross. And it has the black step line, which is designed so that when a market pulls back a little bit too far, and the probabilities of it being a retracement versus a reversal, it's no longer in your favor, then we don't want to take advantage of it. We don't want to take that trade. And so that's what the step line does, is it disqualifies trades. That's its only purpose. Okay? The backbone of the indicator set is the CFMA1. A lot of heavy mathematical lifting going on. So when you hear us say the heavy lifting's already been done, all you have to do is show up and learn how to read the indicators. Okay, it's pretty easy to see that when the CFMA1 turns blue here, prices go higher. And when the CFMA1 turns red, prices go lower, go higher, go lower, go higher, go lower. Right? Almost looks a bit like magic. It's not magic. It's mathematics. Okay? Now there's another indicator that we place at the bottom of the chart. It's called the slingshot. Okay? The green line serves its purpose, and the brown line serves its purpose. It's when you don't see them that you actually begin to appreciate the benefit that they bring to the trade. Now, here we have a situation where we have a cycle, blue and climbing. And it crosses the 50-yard line. So you see, if a person were to buy the open of this candle here, now this happens to, we're still on crude oil. The open of this candle is 37.86. So to get your 10 ticks and be done for the day from 37.86, we would need to go to 37.96. So where is 37.96? There it is. So from there to there, that's called one and done, done for the day. When we say trading's not easy, but it can be simple, this is what we're talking about. Now, here's a little different example in that you have your cycle crossing the 50 here, but up top, where you have the backbone of the indicator set, it doesn't cross until here, which means the first trade that you could go long would be here. Blue and climbing, blue and climbing, the open of that candle right there is 37.87, and so we need to get up to 37.97. And so once again, that's one and done, end of the day. Okay. All right. We'll go back to the ES chart, and I know everyone likes to trade the ES, so let's see if we have any specific ES questions. Can you be in the day trade room and not be a partner? No, it's one and the same. We don't sell the indicators. We offer a 90-day mentoring program. The cost of the mentoring program is $34.97. We are currently, for the holidays, offering a $700 discount, which makes it $27.97. And we are including, at no additional cost, 30 days of the concierge trade alerts. Concierge trade alerts are $14.95 per quarter, which makes 1 month of the concierge trade alerts a $500 value. So we're knocking $700 off the course of the mentoring program, and we're giving you a $500 bonus by becoming a partner right now. I'll post a link on the Google Plus page so that any of you who have an interest in becoming a partner, you can go there, you can click the link, take care of that. I'll get notified once you've taken care of that. I'll get you out a user ID and a password, which will get you into the back side of the website where all the training videos are. Watch as many as you can from the recommended reading list that Michael will send you. Make sure you get your platform up and ready to go over the weekend. Michael and I will be available later today, and tomorrow night I'll be on the trading desk when the Globex market opens at 6 p.m. Eastern. And so as I'm putting together tomorrow night's concierge trade alerts, and I'm putting together the weekly trading zones for next week, I'll be available to answer your questions by email. And I don't know if I'll be able to squeeze in any additional phone calls tomorrow night. My schedule's pretty full. But I can certainly answer an email if you have one. Now, I'm going to put the link to the Google Plus page. I'm going to put that in the chat box. It's a long, gnarly URL that nobody could ever remember. So, there you go. Oh, there you go. Okay. Also, almost anything that I put on the Google Plus page, I usually will hyperlink that to and from our Twitter page. And so let me type that in, twitter.com/CFRN. Okay, it's real easy to remember, twitter.com/CFRN. Or if you're a Facebook person, when you get to Facebook, just type in Emini Futures Trading and follow us on Facebook. And so that'll always keep you up to date on what we're doing. When you find us on the Google Plus, if you want to join us there, you can tell it to send you an email whenever there's a new post or update or whatever there might be. You're very welcome, Michael. Now, okay, Naresh, I look forward to hearing from you. Send me an email, support@cfrn.net. Michael, have a great Saturday afternoon. If there are any questions in the chat box, because a lot was scrolling by as I was talking, I don't want to leave any questions unanswered. So if you'll simply type them into the chat box at the bottom, I will still be happy to stick around and do my very best to answer them for you. Yes, the ES is tradable on Globex. The ES is one of the markets that can be traded literally around the clock. ES, gold, the euro, and crude oil, those are especially good at the London Open, but they can be traded around the clock. If that's what, when you say Globex, if that's what you're referring to, Naresh, the answer is yes. The next comment, futures and margin scare me. Okay, I'm not sure I understand exactly what you mean by that. If you're referring back to the late 1990s when when you heard that all day traders used margin and lost their house kind of thing, this is the absolute opposite of is what we teach. Now, can you still go out there and use margin and lose your house? Yeah, you could, but we're a much more educated trader today than we were back in the heydays of the .com or the pre-.com blow up. Naresh, volume on Globex does not draw, does not, here, let me show you. This is the Globex for, let's see, 1, 2, here's 3 a.m. S&P 500. At 3 a.m. there was 23,000, 3 a.m. Eastern, there was 23,000 contracts traded. At right before the London Open, there was 5,000 contracts traded in that hour. In the hour preceding that, 3,000 contracts. In the hour preceding that, 3,000, 4,000, 4,000. Once London opens at 3 o'clock, then it increases dramatically. 4 a.m., 17,000. 5 a.m., 24,000. So if you're trading 100 contracts or less, you can trade the S&P 500 around the clock. Okay. Now, let me get back to your question, Michael. You see, with futures, we have this incredible thing called leverage. When you purchase one S&P 500 E-mini contract, you're putting up $500. You're controlling over $100,000 of equity in the S&P 500 best of breed. You understand that the S&P 500 is comprised of the 500 best of breed companies. Now, it's not because of just market cap. There's a long list of criteria that the board over at Standard & Poor's goes through to determine who qualifies to be a part of the S&P 500. Okay, so you're dealing with quality companies. Now, the S&P 500 is never going to go to zero. Because it's a best of breed index, any weak companies that no longer meet the criteria, are culled from the herd, and fresh, strong companies are brought in. There's always 500. But again, the weak get kicked to the curb. Now, when you buy one S&P 500 contract, again, what you have bought is $100,000 plus. You just take the current price of the S&P, which the closing price on Thursday was $2,050.75. So you take that figure and you multiply it times 50, because the S&P pays $50 per point. Multiply that figure times 50, and that will tell you how much equity you control for your $500. Now, because we use an 8-tick hard stop on every trade, the most you can possibly lose if you go and buy or sell, you can buy or sell one E-mini contract as soon as the markets open tomorrow night at 6 p.m. Eastern. If you're trading our methodology, the most you can possibly lose on any one trade is $100. So any fears that you might have regarding futures and or margin, you're very much protected. Also, there's no market makers, there's no middlemen. It is a purely electronic market. Your order gets the same respect as Goldman Sachs' order. It's what's called a FIFO system, first in, first out. Purely electronic. Doesn't matter what your pedigree is, who you work for, how many letters you got after your name. Joe on Main Street is treated just the same as Mr. Joe on Wall Street. Is the price deal shown on the Google Plus page? Thank you. No, I haven't had a chance to put it there, Jerry. As soon as I end the webinar, I'll put a link up for you. Does your system work well on the Globex as the volumes dry up? Now, Naresh, there are certain markets that you cannot trade on the London Open and the Globex Open. The Russell, the Dow. Soybeans depends upon, which crop we're trading, old crop, new crop. Don't worry yourself about that. But let me show you. Here's the Russell. Okay. And then here's the volume profile at the bottom. See, during the day session, in this hour, 12,000 contracts, 13,000 contracts, 8,000. But when you get into the middle of the night, even at the London Open, there was only 29 contracts traded, 130. So there are certain markets that no, you cannot trade until Wall Street opens. But four good ones, S&P, crude oil, the euro, and gold. Those all four have sufficient volume and volatility. See, it takes more than just volume. There has to be some volatility. In other words, there has to be some price movement. All right, let's see if there's anything else I missed. Suzanne. There's the link to the Google Plus page. Sure, I'll be happy to email it to you as well, but there it is. Michael, thank you, Michael, for your kind words. So a hard stop means I will get a fill and have a maximum loss of $100 with my hard stop entered. So recommended an account size, and can it be in an IRA? It can be in an IRA. Now, to open an account with different brokers, there's different required minimum amounts. Where I hold an account at Daniels Trading, they have a $2,000 minimum balance, okay? Now, it's important that you have unlimited access to the simulator, because this is where you're going to do your training. This is where you're going to put together your 10 days back to back where you make $100 in 10 trades or less. And so there may be some discount brokers that allow you to get in with less money. I don't think anyone goes less than 2,000 in futures, but I wish I could, well, I'm tempted to say you get what you pay for, but even that's not always true, because I know some people who pay astronomical fees for broker-assisted trades, and they still don't get really what they pay for. So, feel free to shop around, but the most important thing is that you have unlimited access to a simulator with real-time data. Okay, it has to be real-time data, not delayed, so that you're able to practice up to the point where you're ready to go live. Now, Daniels, with the $2,000 minimum deposit, that does give you unlimited access to the simulator. Unlike TradeStation, and I'll just call the name because I'm a certified TradeStation developer, when I left there, or long before I left there, my data fees were up over $300 a month, which is why I became a certified developer, was so that I could get a discount on my data fees. But ultimately, I left them at Daniels Trading. Now, we recommend them, but we're not affiliated in that if you open an account with them, we don't get any type of a commission. If you trade with them, we don't get any kind of a kickback or split of commissions. Those types of arrangements really aren't illegal, but Michael and I just felt that it would muddy the water, and so we wanted to have a broker we could recommend who we felt we could honestly say they were the best because we actually thought they were the best. And these guys have proven themselves out with CFRN Partners for the past 5 years it's been now that they are the best. If you go there, be sure you ask for Bert or Leslie. Their number is 866 928 3310. Tell them you are on one of Dwayne's webinars the day after Christmas. They'll get a real good laugh out of that. And then they'll do the very best they can to help you. Okay? So $2,000 minimum deposit. The most you'll lose on one trade is $100. Is it possible that your hard stop can get jumped in a fast market? Yes. Does it happen often? No. Is it possible that it could happen? Yes. Should you worry about it? No. Because in the beginning, you're only going to have $2,000. Now, as your account size grows, we want you, by the time you hit your third contract, we want you to start drawing a paycheck every week. Well, won't that hurt the ability to grow my account size? No, because you're not going to take a paycheck of a lot of money. I don't care if it's only $100, because many of us who've been at this for a while, now if you're brand new to trading, this may not be a problem for you, but there are many listening to this broadcast today, and many who will listen to it later tonight because they missed it today, and there'll be people who listen to it 5 years from now because it'll be on iTunes. You have never once received a check or a wire transfer from your broker. All your brain knows how to do is wire more money to the broker, more money to the broker, more money to the broker. We are going to break that cycle. By the time you hit your third contract, Bert or whoever your broker is, you're going to instruct them to start sending you $100 a week, or if you want it wire transferred, that'll eat up about half of your $100. But please understand, it's not the amount of money that the broker is sending you as much as it is the fact that the broker is now sending you money instead of you sending the broker. That it is a watershed moment. It is a turning point in your career as a trader when that happens. You'll walk different. You'll stand different. You won't be a big shot. You won't be arrogant because we don't tolerate that. Humility. Humility wins. God loves a humble man. So when you have the humility to know that you're now getting paid weekly, and as the number of accounts you trade grow, the size of that weekly bank deposit, wire transfer, check, whatever it might be, grows, your confidence will grow likewise. Now, caution. Don't ever let your account size get more than 1.5 times the size of the amount you're trading. If you're trading 10 S&P contracts, you need $5,000 in margin. Remember, it's $500 per contract, so 10 contracts is $5,000. I use a 1.5 times rule. That means you need $7,500 in your account. Well, what's the extra $2,500 for? Drawdowns, stop outs, commissions, the reality of trading. In that link where on the Google Plus page where I put the special offer and I put the link to take advantage of it, where I put all that stuff, I'm also going to put a link to something I wrote just a little while back called The Truth About Trading. I'll also put a link to the 4 goal-setting tips for Emini traders, so that you have a good framework for what you're looking at here. Remember, this isn't a we take your money today and forget who you are tomorrow. We're committing ourselves to you for the next 90 days. And as long as you decide to stay an active partner after that, you will continue to have absolute access to every single thing that you had access to while you were in the mentoring program. We consider you a partner in the mentoring program. Once you've completed 90 days, we then consider you a partner who has graduated the mentoring program. Okay, let me see what other questions there were. My broker was $500 minimum entry, worked with Ninja, little old me from Canada. Yeah, no broker has a $500 minimum deposit to trade futures, because the minimum to trade one futures contract is $500. So, yeah, I think something's a little confused there, Bob. Okay, so you could open an account with $500, but what good does it do you? I mean, what does opening the account, if you can't trade anything, what happens next? That's what I'm trying to figure out, because maybe you have some information here that I can use to help the folks that are in the meeting here today. So now that you've opened an account for $500, what can you do? Yeah, Russell, we certainly can. In fact, once you become a partner and you have access to the members area, there's some PDF documents in there that talk about writing your business plan. It's the same type of business plan a person would write for any kind of business, although it's tailored to the trading business specifically. And along with writing your business plan, you're going to write your trading plan. And to many, it sounds like, well, gee, isn't that the same thing? No, they're actually 2 very different documents or instruments, if you will. And yes, we will help you through that process. Okay, guys and Bob, tell me, after you get the account open for $500, what are you able to do? Okay, so you can't actually trade anything. You can just open an account. Does it give you unlimited access to the simulator? Yes, Robert, I did. I went over the pricing, I went over the current discount, I went over the bonus, and I'm going to post all of that on the Google Plus page here in just a few minutes, right after this mentoring session is over. So grab this link. I've already covered all of that in detail. And I just privately sent you the link again. But give me 5 minutes once we end the webinar here to go get it posted. So it'll all be in writing for you and all make perfect sense. Bob, yes, well, Lifetime Ninja does, and I go through them for data. Lifetime Ninja does. I'm confused, Bob, so I'm just going to let it go. Yeah, I mean, there's brokerage guy. Oh, and Naresh, thanks for sharing that. Guys, there are brokers out there that'll let you open an account for 25 bucks. They tend to be the Forex brokerage firms, and they tend to change addresses a lot, and sometimes they move in the middle of the night. So, again, not going to call any names or knock anybody. I'm just going to suggest that you be very careful. Make sure that they're a member of their local Better Business Bureau. Find some way of verifying that they're for real. And I posted a video not too long ago. Uh, One of the most scandalous things I'd ever seen. I edited it so I didn't have the guy's name in it because I didn't want people going to his website and getting sucked into the scam because he was so convincing. But it was. I'll try to find that video and repost it. It's all when it as long as you know it's a scam going in when you start watching it, it's almost funny. But then when you think about the hundreds, if not thousands of people who fell for it, you almost want to cry. Uh, and if you do get a little misty-eyed, that's okay. Oh, it's a video about a guy who shows some people in a room and how they open some accounts online for like 25 bucks. And through the use of his magical software over the course of this quote 1 hour webinar, you could see their account balances going up by hundreds and hundreds of dollars as if by magic. Yeah, it's a real bad news kind of thing. So I'll find the link, Michael, and I'll post it again just as a holiday warning because maybe people got some money in there. Maybe Santa Claus brought people money and they're looking for some place to spend it. They don't want to spend it there. Russell says AMP allows a $500 opening account with $400 margin on the ES. So you've got $100 breathing room. So if you get stopped out on one trade, you're dead in the water. See, Russell, that's just not, and I'm not saying you're suggesting somebody should do that, but, you're saying it's insane. Yeah, it's insane. Russell's making a good point. AMP will let you open an account for 500 bucks, and the margin to trade one ES contract is $400. And so if you trade that one contract, and gosh forbid you get stopped out on your first trade, now you're dead in the water. You don't have enough money left to trade, but they've got $400 a year money trapped in their coffers. So you've either got to ante up more money or go through the rigmarole of liquidating your account, and I'm sure there's some penalty involved, and then, ultimately getting a check sent back to you. I think Daniel's, again, I don't get paid I don't make any money by you going with Daniel's Trading. I just know they'll treat you fairly. And the DT Pro platform is free. DT Pro platform is free. You don't pay any data charges. There's no inactivity fees. There is one charge, $18 a month from the CME. Now that's the actual Chicago Mercantile Exchange fee that they levy on all accounts, period. It doesn't matter what broker you're with. You will have to pay that $18 fee. But you won't pay hundreds of dollars in data fees like you do with some of the brokers out there. That's one of the things that makes Daniels stand apart. Their number again is 866-928-3310. We accept clients from all different brokers. The platforms we support are DT Pro, NinjaTrader, anything that was built off the old Open eCry backbone, or if you have an account that is cleared by Gain Capital, then you have access to a platform that our indicators are compatible with. We're not on TradeStation right now due to security issues. In this coming year, we may be on Thinkorswim. There's been some early level discussion on that, but certainly no start date by any stretch. As that becomes closer to a reality, we'll of course keep you posted. The cost to continue Raphael as a partner after the initial 90-day mentoring program is $75 a month. Everything stays intact, just as if you were still in the mentoring program. You still have the live trading room, weekly trading zones, weekly workshop, video library, and the part that's the most valuable of all is you have unlimited access to both Michael and myself. Now, I'll be honest, I'm not bragging, but I have a private equity client who pays me $500 an hour for one-on-one mentoring. He chose to pay me that because he wanted special attention. I'm not boasting, because he paid me a lot of money because he valued my advice and wanted to be able to call me anytime, night or day. But there are very few mentoring programs out there that give you unlimited access to the developers. And by unlimited access, it's in stages. If it's a question that can be answered by email, we will. If you need a phone conversation, we'll do that. If you want to have a real one-on-one mentoring session, we'll set up a go-to meeting room, and you and I, or you and Michael, will meet at the prescribed time, and you'll see his charts, he'll see your charts, I'll see your charts, you'll see my charts, and we'll do whatever's necessary to get to the bottom of the problem, whatever the issue is. And different people have different issues. However, when it comes to trading, all of the issues typically come back to the same place. Either number one, you just flat aren't following the rules, or you're kind of following the rules, but you're mixing in other stuff that just doesn't mesh, or it's fear. Now, there's three kinds of fear when it comes to trading. There's the fear of being wrong. Nobody likes to be wrong. That's why we'll hold on to a losing trade for days, but we can't stay in a winning trade for 2 ticks. Because if we hit that exit button and lock in those 2 ticks, woohoo, we're a winner. But if we get stopped out, we were wrong. Right? Wrong. You have to get that out of your vocabulary. Because we're dealing in probabilities, you have to grasp that you're going to be stopped out. It's part of the business. It shouldn't feel like a mule kicking you in the gut, okay? Because it's not. The market's not out to get you. The market's not your enemy. They, quote unquote, they, whoever the heck they are not trying to run your stops. That's a bunch of foolishness. Now, is there a lot of manipulation in the equities market? Yes. But we're talking about futures here. This is a purely electronic market. There is no monkey business. That's why I came here, okay? Because I got tired of the monkey business. So there's the fear of being wrong. You have to overcome that. There's the fear of losing money, okay? Let's deal with that. If you have a fear of losing money, it's because you're undercapitalized, or you're trading more contracts than you've earned the right to trade. This is why we start you in SIM, make sure you can be consistently profitable, and then allow you to go live with 1 contract. Once you've increased your account balance by $2,000, let's say you're trading the S&P, it only costs $500 to add 1 more contract in the S&P. But yet we want to see you increase your account balance by $2,000 before you add the 2nd contract. Part of it has to do with teaching you discipline. So, fear of being wrong, fear of losing money. If you're only trading 1 contract and you're dealing with the fear of losing money, You need to stay in sim until you save up enough money so that you don't fear losing $100. Now, that $100 bill that you're fearful of losing is also identical to the other $100 bill in your pocket that you're going to use to take your wife out to dinner on your anniversary. Now, on your anniversary, you spend that $100 with a smile on your face because it shows that you're the man, you've worked hard, and you can afford to pay for a $100 dinner. But yet, in the market, trading live, that $100 means something else. It's your measure as a man. It measures you as who you are as a trader. That's faulty thinking. See, there's two lines, the 90% line and the 10% line. The 90% line is filled with really good people who had really good intentions and ideals. They wanted to do great things with the money they earned. They wanted to build churches and orphanages and feed the hungry and do all sorts of things. So why did they end up in the 90% line? Because they did not learn some simple, basic things like how to think in probabilities, how to be disciplined, the things that we're going to teach you that will allow you to stand in the 10% line. The 90% line is filled with people who think, well, I'm going to keep doing the same thing, but tomorrow I'll get different results. No, you won't. You'll get the same results. So we got fear of being wrong, fear of losing money. Last but not least is the fear of being embarrassed. Perhaps you got into this trading business. You got a little head first, and you started talking to people. You told your neighbor, you told your coworker, maybe you bragged to your spouse. Maybe you even told your pastor that new wing the church has been needing for the children's ministry. You found this new business venture, and you're going to be able to pay for it in 6 months or a year, and you made the mistake of telling him it had to do with trading, and all of them, your gardener, your neighbor, your co-worker, your wife, and your pastor, they all told you, don't you know, everybody who tries to trade loses their money. So when you sit down to trade every day, you've got like this 1,000-pound anvil hanging over your head, swinging back and forth, back and forth. Now, is it possible to have the fear of being wrong and the fear of losing money and the fear of being embarrassed all trying to throttle you at the same time? Yeah, and it's quite common. So you have to address each one. The fear of being wrong, you get rid of that by learning to think in probabilities. The fear of losing money, you get rid of that by saving up some more money so that you're not undercapitalized, or reducing the number of contracts until the loss is no longer meaningful in relationship to the amount of money you have available. And number 3, the most difficult, is whoever you have spoken to and they pointed their finger at you and said, you're going to fail. You've got to go to that person and you've got to set them down. Hey, I want to talk to you about this trading business that I mentioned. Yeah, how's that going? Except your pastor, he probably won't come at you like that. Hopefully, dear Lord, I hope not. He won't come at you that way. But the other folks will. Yeah, how's that working for you? Well, turns out it's a little more complicated than I initially understood. But I'm in the midst of a training program where I am learning step by step, day by day, how to become consistently profitable. So I am still confident that I am going to learn the skill of trading, and I will pursue that someday as my full-time income, but I may not get there nearly as quickly as I initially thought I would. Suddenly you've diffused that situation. The coworker who didn't believe in you, the gardener or the spouse, suddenly, instead of waiting to be able to say, I told you so, because you have shown them your humility, instead of being the enemy, they now become your best supporter, your cheerleader. Instead of praying for you to fail, not your spouse maybe, but the other guys, they're praying for you to succeed. They're now alongside you. They're rooting for you, cheering for you. So when they ask you, how are things going? It's not so that they can say, told you so. It's so that they can say, bless God, because I've been praying for you, brother, every day, that you would get revelation knowledge. And when you have that kind of support, oh man, developing the confidence you need to face a new day is so much simpler. So identify your fears. Fear of being wrong, fear of losing money, fear of being embarrassed. You may have all three. You may have 2 out of 3. Fix them. Fix them before you sit down to trade live money again. Now your pastor, okay, if he's the one you've made some promises to, again, hopefully he never was waiting to say, I told you so. But now you won't have to sneak out the back door at the end of service. You can actually go out the front door and shake his hand. And when he says, hey brother, how's things coming? You can look him in the eye and say, Pastor, I had a rough week. I need your prayer. And he'll understand, and he'll tell you, I will be praying for you. Or you can look him in the eye and say, hey Pastor, I had a good week and I really think things are coming together. And he'll smile, and you'll know that you're 2 brothers shoulder to shoulder with a common goal. You're the laborer. You see, whatever's wrong we can fix. We just have to identify it. Every one of you, whatever trading plan, methodology you have that has not served you well in 2015, if you want to fix it in 2016, you're going to have to do something different. Doing the same old thing will get you the same old results. Now, if you've ever been in our live trading room, you see Michael up there with 5 charts talking really fast, and the most common comment I get is, I'm totally confused, I have no idea what's going on. Okay? Relax. Just watch, just listen for a couple days. The clouds will start to part if you do this. Let's say you're going to be an S&P trader, or you've decided as you write out your business plan and trading plan that you're going to trade the Russell and Crude. Okay? It doesn't matter which chart he is actually trading on at the moment. Just pretend it's your chart. Just pretend it's the S&P or Russell or Crude, because we trade every market exactly the same. We use the same time frame, we use the same trade setup or strategy, and we use the same indicators on every single trade. Now, I gave you a glimpse of a chart that showed you how simple trading can be. Okay? Price is always building legs. Leg, retrace, leg, transition, leg, retrace, leg. I will teach you how to identify those. Now, I did that on the, what did I do it on? On the crude oil chart. Is that the only chart a person can do that on? Absolutely not. If you're an ES trader, you bring up the ES chart. And so, red on top of red. And what do you have if you're an S&P trader? You're getting short about right there. The open of that candle is 56.25. The swing low down here is 49.5. So that's about a 6-point move in the S&P. Trading's not easy, but it can be simple. That was the S&P. Here's the Russell. This is how we're able to trade the same markets in the same time frame with the same indicators. Blue, blue, higher prices. You see that? Red, red, lower prices. Blue, blue, higher prices. From up here, right there, where you might be getting short at 1154.70. $1154.70. Well, let's see, the open of this candle. Actually, we could, yeah, 1154.90. At 1144.90, we didn't quite get there. That's a $1,000 per contract move. Now, would most of our traders have remained in that trade all the way down? Nope, chances are they'd have got out here. Why? Because, now, they might have re-entered right here, red and red, you see, but the close of this candle was 49.60. So from 49 to where were we at up here, 55. So that's $500 per contract. Costs you $500 to put on a trade for one contract in the Russell. That's 100% return on your money. And yes, you can do that day after day. Trading is not easy, but it can be simple. So if it's that simple with just those two lines, why do you put those other lines? Again, it's like training wheels. It's to make sure you stay on the right side of the road and you execute your trade at the right time. Our indicators tell you when to enter. Whether you're in Brooklyn or Bangladesh, everybody gets long or short a particular market at the exact same time. You can then exit with a hard stop, or you can trail your stop. It's entirely up to you. Let's see. Can I get DT Pro to run on a MacBook Pro? I don't believe so, Ron. I think you have to use what they call Parallels or Boot Camp, and then you can run any Windows-based program. But go to the danielstrading.com website and see if there is an option available now for Apple. I know at one point they were working on one. And then perhaps Google futures trading platforms for Mac and see what you come up with. And there's a good chance one of those platforms will be compatible with our indicator set. Feel free to shoot me an email later and I'll help you look if you need some help. Raphael, is there any such thing as swing or longer-term trading portfolio building with futures? I understand the advantages of day trading futures, but I'm not clear about longer-term trading portfolio building. Yes, absolutely. I'll show you. Jerry says, because we're all probably trying to transition from a day job to this, what do we do if there are days when we can't be there for mentoring? What you do, Jerry, is send me a list of days that you're not able to be there, and I'll tack that on to your 90 days. Now, we do record the live trading room every day. Every trade taken, every word spoken. But it's not, but just watching the video, it's not exactly the same as you being able to actively participate. So, I mean, like every Friday, you could send me an email that said, hey, Dwayne, I had to miss 2 days this week. Of course, we have someone who'll check the logs and blah, blah, blah. Not that we don't trust you, that's just their job. And so then I'll add 2 days onto your 90. And so, I mean, can you be there most of the time? Or would it be rarer for you to be there than not be there? Maybe that's a good way to say it. And then, Raphael, I'm going to answer your question. So, Ron, I answered your question on the DT Pro. Raphael, I'm going to answer your question right now. And Jerry, I'm waiting for an answer on your question. Let me just sum up your question, Jerry, in that we'll make sure you get 90 days of actual mentoring in the classroom. So if you miss a few days, it won't be a problem. Now, I just see reconnecting up here, which hopefully I haven't lost my internet. Can you guys still hear me? Jerry, can you still hear me? Okay, they're doing server maintenance. That's why I'm getting this reconnecting on the charts. But I want to try to show Raphael. Let me see with what data I have loaded up. Let me see what I can show you. Let's pop over here for a moment. This doggone thing will not let me change my time frame. All right, we'll give it a second. Oh, I've got a silver weekly chart running here. And that's not showing up. Here's a daily chart of the S&P. Okay, that's showing up. Now let me see. This is all I wanted to do, is I wanted to get to a really larger fact. Let me make all this go away, because this is stuff that would have made sense if you've been watching the radio show each week, but I'll get it out of the way for now. If this will allow me to add my indicator set, then I can answer your question. So, cross my fingers, see what happens. Huh, how about that? Okay. Unfortunately, I can't get that to move out of the way. Oh well. We'll work with what we got. And it won't let me go back any further. Okay, so this would be a crude example, but here we have a bullish cross. Let's see if it'll let me throw in the slingshot. Now this is a daily chart of the S&P 500. If it's reconnecting, I guess it's not going to let me do that. Oh, great. Now I just killed it all. No, I didn't. Yay. Oh, and we reconnected. Okay, great. All right. So let's remove the volume for now. Okay. All right. So this is a daily chart of the S&P 500. We get a bullish cross here. Now what we need is some bullish divergence. Okay, now the term divergence is a little confusing for new people who come in with us, because typically with divergence, what you're looking for is you're comparing an indicator to price. In other words, maybe price went higher, but the indicator went lower. That's kind of typically how people understand the term divergence. We use it a little differently. We're looking for divergence inside of this indicator itself. And so the easiest way to explain it is when the blue line is above the 50-yard line, that's what this little multicolored line here, and the green line is below, that's bullish divergence. I should flip my candle around. That might make more sense. Okay. When the blue line is above the 50-yard line and the green line is below, that's bullish. And so anywhere in this little area right here, okay, we would look to get long. Now, we have other ways of determining when to get long. We could draw a little trend line right across the tops of these candles. Okay. Now, as soon as that trend line is broken to the upside and we have bullish divergence, the worst case scenario is that you would get long on the open of this candle. That's worst case. There's no question that you're going to be getting long. 2004. Now the open of that candle is 2009. Okay. Now you'll notice that here, as we approach this double top, then we're going to start showing some concerns, because we know this isn't going to go to the moon. At some point, it's going to start to grow weary and take a deeper retracement. The issue with most swing traders is, do I take the deeper retracement, which is what this was, or was it? Because you see, we failed to put in a higher high. All right. So let's just go back to here. In worst case scenarios, we got long at 2009. The swing high of this trade was 2081.50. So that's about a 70-point move in the S&P 500. Once price starts closing back below the step line here, this little black step line, once price starts closing below it and your cycle line turns red and starts to slope down, that's an indication that lower prices are coming. And interestingly, note where this swing low is, just about right where we got in. Okay, so now that the charts have reloaded, let me show you the same thing but on a different market, on the Russell. Okay, so come on. We haven't been too long shift contract, so here, let's use a continuous contract and see if we can pull in a little more information. Okay, bullish cross. After a bullish cross, we need price to pull away and then price to pull back. and then price to give us an up close. Okay, so we have our up close, and we have right here a price of 1159.70, which ultimately takes us to a swing high of 1201. So off the top of my head, it's about a $4,000 move per contract in the Russell. However, you had to weather this, okay? Thing you have to understand is if you want to trade longer term, swing term trading, then you have to be willing to put on a larger risk than what we use in the live trading room, which is 8 ticks. Now there's also another way of doing that. When you get the signal to be long, you can drill down to the live trading room chart that we use, which is a 4-tick range chart where we only risk 8 ticks. And you can wait for a long setup to come along, which is probably going to come along here on this day. You may have gotten a couple false starts here, but you'll start getting long setups here, and that will take you to here. Okay. Now, also, if you're getting long here, okay, the most significant swing low on the chart is back here. So if you're willing to use larger stops, that's what you're going to look for. You want to be a couple of ticks below the most recent swing low. And this area where you got the bullish cross, that's very important. Okay? Bullish, because that bullish cross, that's the defining line between bullish and bearish. Okay? Now, if we go here, and if I turn up the jams on this a little bit and turn that into a daily chart. Okay? This is the first candle that you could go short on because it's the first candle that opens below a red CFMA1. The open of that candle is 1178. Red and red from 1178. You put in a swing low down at 1101. That's about 77 points, which is about $7,000. Yeah. Now, here's the issue. How do you know to get out here? Well, unless you're psychic, you really don't. Because you can't even use like a Fibonacci extension tool because you don't have a retracement to project out where price may go. So the first close above the CFMA1 would actually be here. Now that price is 1143. The entry was 78. So 43 and 78, what is that, 35? Just doing this in my head. So that's a $3,500 per contract trade. However, you have to, if you're going to be a swing trader, you have to learn to be able to deal with the heartbreak of the money you left on the table. Okay? Now, you might have a hard target that you're shooting for. In other words, when you get short here, look left. When my children are crossing traffic, I always say, look both ways. When you're trading, you only need to look left. Now, those who say support and resistance is broken, are woefully, woefully wrong. You'll notice that this area here was support, 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 and it was support for a day, and it finally gave way. And so you were given a day here when this candle, this little green candle, showed you that the momentum, the energy of this down move was wearing out. You could have taken your profits there. Now getting out down here becomes a little more tricky. But can we look left? Let's see. Let's go with a continuous chart and see what it can show us. Here we go. All right. So on this candle here, you haven't reached these lows. And there's a good chance that you won't, because buyers who missed this are waiting here with bated breath. They don't want to miss the next move. They're thinking to themselves, wow, I could have been in a move from 1080 to 1200. That's a lot per contract. The Russell pays $100 per point. There's 10 ticks in a point, so you can do the math. So you have to determine on this move down, okay, where you're going to take your profits. If you stay in it down here, your next point of reference is here. Now, you don't have to wait for this close here. Once you get this strong daily up candle here, and it's approaching, because as soon as it gets on the other side of the CFMA1, that's a call for higher prices. It may still pull down and touch, but you see how this has turned up and is turning blue? And you watch when the markets open Sunday night, if we have any strength on the open, this is going to curl up, and you're going to wish you had gotten long down here. And some partners did. Okay? But this is very advanced. This comes over time. In the beginning, you have to learn the very basics. And the very basics are found here. Okay? This is what will help you stay in the business long enough to actually learn the business. Okay? Bullish cross, price pulls away, price pulls back, up close, by the open of that candle, which is 2056.75, and at 2058.75 right there, that's where you take your profits and you're done for the day. Okay? All right. Let's see, is there any other question? You're welcome, Jerry. Raphael, I know of no good reason to continue with equities. With equities, if you walk into your stockbroker and say, here's $500, what can you get me? Well, I can get you a couple shares of Apple, right? If you walk into your stockbroker's office and throw down $500 and say, I'd like $100,000 of equity in the S&P 500, he's going to just laugh. If he's a stockbroker, he may not even know what futures are. See, $500 in the S&P 500 gives you the leverage. It was as if you owned $100,000 of equity in the S&P. You own not any individual one stock. You don't own $100,000 of equity in Apple, but you own $100,000 of equity in the basket of stocks. So for me personally, no, there's never a reason to go back to equities. Okay. Jerry, you're welcome. Suzanne, all of you guys. I'll get that link up in the next 5-10 minutes, worst case scenario. Let me paste it into... You know what? I'll do you one better. I'll put it in both places. But this you can easily remember. Today's the 26th. CFRN.net 26. Hang on, you know what? I got to make sure. It might require 3 letters. Hold on. And I'll tell you. Just hang on. You've been here this long, might as well hang on. There we go. Okay. Let's see. I'm going to add a page. Make it an HTML page. Hey, it worked. Okay, so I didn't know if I could create a 2-digit page, but let me just test it, make sure it really is there. If you go there now, it's going to be blank. Yep, okay. CFRN.net/26, because that's today's date and that's today's special. So let me put it in the bottom. Now for those who already left, CFRN, I'll put it in both places. CFRN.net/26. It's easy to remember today's date. There you go. All right. Any last questions? Any last minute questions? We've been at this forever, and I told my wife I'd be about 30 minutes, so I got to go face that music. Any other questions, guys? All right. Listen, thanks so much for coming, hanging out. I appreciate it. I'm amazed at how many of you came out on a Saturday. That really speaks to the fact that you do understand you've got to do something different if you want different results. And I honestly believe with all of my heart, if you'll commit yourself, as we'll commit ourselves to you, then 2016 is going to be the year for you, for me, for the world. By the way, in case you don't know, that is our mission statement. We are changing the world, one life at a time, one tick at a time. If you get a chance, grab the latest copy of Chicken Soup for the Soul, Volunteering and Giving. I think we're on page 101. After we built the orphanage, there became this incredible need for babies. We weren't set up to take babies into the orphanage. We were doing primary through 7th grade initially. Now we do primary through high school. We needed a separate facility to handle the abandoned babies, which is a crisis there. In America, if a mom doesn't want a baby, she takes him to the fire station, she takes him to the hospital, no harm, no foul. Over there, they don't have that policy. So they're found alongside the road, they're found in garbage dumps. And so we didn't have the finance. I mean, we were overextended as it was with 800 kids in the orphanage. We didn't have the finances to expand into that area. And God rose up an army of complete strangers in Colorado. Some of the nicest ladies. Well, there's a lady that leads the group, but ladies and men. An army of saints. He rose up out of Colorado, sent them to Kampala. It's just an amazing story how we all came to know each other and the things we've been through over the years. And they took it upon themselves to build Aggie's baby home from the ground up. We'd already purchased land, but they put in the building, and everything is just first class, state of the art. Go to ugandalove.org. Here, let me put that in the chat box too. ugandalove.org. These people have just done an incredible first-class job of taking care of these babies. We're now actually getting some of them adopted here in the U.S. To American parents, and some are going to the U.K. So they're going to have a future. The kids who grow up in the orphanage, they're going to have a future too, because we're giving them a first-class education. Now, please don't misunderstand. We're not a charity. CFRN, the radio station, our educational firm, we're not a charity. Not at all. We are a for-profit business. We have several ministries that support the different functions of the orphanage and the baby's home. And so if you in some way want to do something tax deductible, that of course can be done. Just don't get the two confused. And a lot of people do. And I don't know why, because we always make it very obvious that they are separate entities. But every person who becomes a partner, by you becoming a partner, you become a part of this movement, changing the world one tick at a time, one life at a time. Look forward to working with you in 2016. If you're sick and tired of being sick and tired, if you've had enough of being enough, of not being enough, of not having enough, if you want more, we will commit to you if you'll commit to your future. It's not easy, but it can be simple. Thank you so much. I hope you all have a very happy and prosperous new year. And thank you for spending your Saturday with me. Goodbye.